Welcome to the Goose Hollow Capital Weekly Market Update. In this edition, we'll recap recent events, preview what's on the horizon, and share some interesting charts and market price action that caught our attention. We start with a review of the year-to-date performance of various asset classes. The table above shows performance as of the end of the last quarter. We see that in the second quarter, NASDAQ was the big winner, climbing 8%, bringing the gains to 22% on the year, followed by the S&P 500. We saw underperformance in Europe due to the political turbulence in France and along with treasuries, which lost about 2% with the better economic data. The dollar is up about 3% this year and could have a potential large move as the Fed reduces interest rates and we get closer to the election. Next, the ongoing war in Ukraine is significantly affecting the global commodity supply chain, with both sides entrenching further. Russia, a key player in the commodities market, faces new sanctions that could disrupt the supply of essential metals, impacting battery electric vehicle production and the broader energy transition. In this context, we maintain a favorable outlook on platinum and palladium. The supply of these metals remains constrained, and there's potential for additional disruptions. Stay tuned as we go deeper into how these developments could shape the future of the energy and automotive sectors in our next episode. Next up on our housing segment, we dive into a fascinating trend captured in a recent Bank of America chart. This chart reveals a steady increase in multifamily vacancy rates, coupled with a new downward trend in rent growth. With a significant uptick in credit to the multifamily sector over recent years, this is certainly a development worth monitoring. Last week, we saw a notable decline in Arbor Realty Trust, a key player in the transitional commercial real estate lending space. Investors are increasingly focused on credit performance, especially in light of higher capitalization rates and weakening multifamily fundamentals. Key metrics such as delinquency rates, reserve rates, loan modifications, and realized losses will be under close scrutiny in the coming months. Stay tuned as we continue to follow these important trends in the housing market. What are the consequences of corporate defined benefit plans being fully funded? According to recent charts from Milliman, we see a trend of fewer underfunded plans, with the overall median funded ratios now around 75%. As funding levels improve, many of these plans are required to de-risk their portfolios. This often means selling equities and other higher-risk assets in favor of safer investments. The second chart indicates that this shift could lead to a significant flow out of equities and into fixed income over the next few quarters. This is something to keep an eye on as it has a meaningful impact on stocks and bond flows over the rest of the year. Finally, a chart of the probability of Hillary Clinton winning from October 2016. As you can see, the market was overwhelmingly convinced about the outcome, and a Trump win was a huge surprise. This time around, the prediction markets are closer to about even, with President Trump the favorite so far. Perhaps the implication here is we may not see a huge reaction from markets post the election. Also, the repricing of assets could happen ahead of it. Thanks for watching, and we will see you next week. This material is intended for information purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of July 2024 and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the reader. Investing involves risks. This information is not intended to be complete or exhaustive, and no representations or warranties, either express or implied, are made regarding the accuracy or completeness of the information contained herein. This material may contain estimates and forward-looking statements, which may include forecasts and do not represent a guarantee of future performance.